Hey guys, it's that Dividend guy coming at you with another list video. This one caught my attention because it kind of bags on Walmart. Had to jump into it. Forget Walmart. Here are 3 better dividend stocks. Not only do they offer higher yields, but they could also generate great returns this year as their businesses continue to grow. Let's take a look. Walmart is a solid long-term investment that you can hold in your portfolio for many years, but if you're a dividend investor, you can do a heck of a lot better than the income you can earn from the stock at just 1.6%. It's not much higher than the S&P average yield of 1.4. 3 stocks that offer better payouts and that have some exciting growth potential this year and beyond are AbbVie, Kraft Heinz, and Viacom, CBS. First is AbbVie. They're a drug maker with an impressive yield of 4.5% that can generate significantly more revenue for you than Walmart on a recurring basis. $20,000 investment in the healthcare giant would earn you about $900 on an annual basis, assuming payouts remain intact, whereas at 1.6%, you'd only be making $320. In most recent earnings report, released in April, AbbVie posted diluted earnings per share of $1.99 for the first quarter ending in March 31st. That is well above the $1.30 quarterly dividend that the company pays, putting its payout ratio at 65%. Based on the current run rate, that makes AbbVie an attractive buy even beyond its dividend. Is the fact that the business could get a boost this year in the economy as the economy opens back up, especially if people are going to more social events and want to improve their appearances with Botox. Last year, AbbVie completed a $63 billion acquisition of Botox maker Allergan. With inclusion of Allergan in its portfolio, the company reported sales of $13 billion in Q1. That's a 51% year-over-year growth rate. This month it also announced the acquisition of Soliton, which through its rapid acoustic pulse technology can improve the appearance of cellulite. Both acquisitions could position AbbVie for some terrific growth ahead. Prior to the acquisition, the company had already raised its guidance and EPS for this year. Previously, AbbVie was forecasting a range of $6.69 to $6.89. Now it expects between $7.27 and $7.47. Last year, AbbVie's EPS totaled just $2.72. With stronger bottom line, investors can benefit from the raising share price amid more bullishness, and there are also more room for the dividend aristocrat to continue raising its payouts, making AbbVie a solid income investment to add to your portfolio today. I do 100% agree. AbbVie has been making very smart acquisitions, and they have the cash flow to keep boosting that dividend, which is what dividend growth investors need. Not only does it pay a better dividend than Walmart does, so they are right about that. The growth rate is phenomenal. They were paying $1.07, now it's $1.30, so they boosted the dividend by like 23 cents. That's half of, I believe right now, Walmart pays 54 cents a share. So they pretty much did a dividend increase last year of 50% of what Walmart pays us as a dividend. So definitely AbbVie. Not only does it pay us a better dividend right now than Walmart does, it also grows a lot faster, which is even more important if you're looking for a vehicle to retire off of. Walmart just doesn't make the cut. Next, we got Kraft Heinz. If you think Walmart is a stable business, then you'll love Kraft Heinz. The big box retailer is the food company's longest customer, accounting for more than 20% of its revenue in each of the past 3 years, and 3.7% of Kraft pays its shareholders a much higher dividend than Walmart. $20,000 investment in stock would earn you $740 in annual income, with EPS of 46 cents a share. The period ending March 27th, it also had sufficient room to support the quarterly dividend payments of 40 cents on a cash flow basis. Things look even better. The company has reported free cash flow of $4.8 billion over the trailing 12 months, easily enough to cover its $2 billion payouts during the same period. When the company last released results on April 29th, its net sales were $6.4 billion, which represented growth of 3.8% from the prior year period. Kraft expects similar numbers for the next quarter, projecting mid-single-digit growth for the top line. This is another business that could do well amid reopenings, as food service businesses could drive up demand for Kraft's products. The company's CEO says the quarter exceeded expectations, and the business is going to invest in its operations to scale and drive even better results this year. If that happens, Kraft could be another solid stock to own in 2021, not for its dividend income, but also for the returns it could generate in your portfolio. I agree. Kraft Heinz is one of those brands that people just buy. It's one of those brands that my family buys. Your family probably buys. So it definitely has customer loyalty. The problem with this company that I have is the dividend, because they cut it. It's not a long-term dividend grower. They cut the dividend, which kind of ticks me off. So I've owned Kraft Heinz up until they cut the dividend, and then I cut them out of the portfolio. But I agree, for the price, the dividend is nice, and it is a better performing stock than Walmart. Not necessarily on a appreciation for the price or the dividend growth, but the thing is, for the price that you pay, Walmart, let's say it's $125, or say, I think that's around, let's say 150 for 54 cents, or Kraft is $40 for 40 cents. So 100 shares is what you need, about four grand to be dividend efficient, which it's more than that in Walmart's, for Walmart stock. So metric-wise, Walmart actually comes ahead, but when you're looking for value for your dollar, Kraft Heinz comes out ahead. So I do agree with that as well. Next is Viacom CBS. It may not be a name that pops out when you think of big streaming stocks to own, but the company's announcing plans to raise a whopping $3 billion to invest in that segment of its operations. It may not be long before Paramount Plus service starts to make more of a name for itself to draw in more subscribers. The company is already seeing some solid growth numbers. Revenue grew over 65% over the year during the first 3 months. Its total subscriber count is now 63 million. That's still a drop in the bucket compared to Netflix, which has more than 200 million subscribers. But as it puts more money into the area of the business, the gap will likely shrink over time. For income investors, the stock is still attractive because, unlike Netflix, it does make regular dividend payments while also focusing on growth, and its 2.7% yield is a lot higher than Walmart's current payout, although it may not generate more than $480 on a $20,000 investment. The stock potential to rise in value over time is what makes it a great buy, especially if the streaming service does well. They reported $1.44 in Q1. As alone is already higher than the annual dividend of $1.96. Of 96 cents. So what that means is they're generating way more profit than what they need for the dividend, which is great. With a safe dividend and some exciting growth prospects, it is another stock that could make for a long-term investment. So yes, I completely agree. You could say the same thing about Warner and HBO Max, but I agree. Walmart does not hold a candle to these stocks. So let me know which one is your favorite. Obviously, I'm an AbbVie investor, so I'm going to say AbbVie is my favorite, but then it's Viacom and then Kraft. I don't have anything against Kraft. I think it's a great company. It's run very well. I just think it hasn't innovated enough to really hold a candle to Walmart. But it's definitely the least healthy out of the three companies as well. But AbbVie's definitely my pick out of these three. So let me know if you own any of these stocks, or if you own Walmart. If you want to defend Walmart instead of saying forget it, let me know why. Thank you guys so much for watching. Remember to hit the subscribe button, and when you do, hit the bell notification so you don't miss any updates. These were 3 stocks that Motley Fool thinks are better than Walmart. Thank you so much for watching, and I'll see you guys tomorrow with another list update or some other type of video. Thank you so much, and I'll see you tomorrow. Take care, guys.